Headline analysis of the day for long-term investors. A few big pieces of news today. The Fed held interest rates steady and the Dow fell 1,153 points or 2.19%, its worst day since April 2025. So was the drop due to the Fed? Maybe, but not in the way some of the headlines suggest. Let's start with what we know and what is new, then the unknowns, then a closer look at the headlines. What we know, the hold on the rates was widely expected. Markets had priced it in. Here are 4 other factors that potentially drove stocks down today. 1. Long-term bond yields rose. Higher long-term rates reduce what companies' future earnings are worth today, which lowers what investors will pay for a share now. And the 30-year moved more than the 10-year, which suggests the bond market was focused on long-run inflation rather than on the next Fed meeting. That's the potential link between a Fed that held and a stock market that fell. 2. Asian chip stocks fell overnight. Before the Fed said anything, South Korea's main index halted trading for the second day running after an 8% drop. 3. Crude oil rose on the Strait of Hormuz tensions. Higher energy costs pushed inflation up, and that is the problem the Fed decided not to address with a rate increase today. 4. 2 of the largest technology companies were set to report earnings after the close, with investors already questioning how much they were spending on AI. So part of today's move may reflect expectations about those results. Then there are the unknowns. There is no way to divide 2.19% among those factors and say how much each one contributed. Days like this have several causes at once, and no one can measure the split. Now let's look at the headlines and at what to watch for when you read them. Here are 3 from today. 3 different framings, each implying a cause and effect that is at best part of the story, and none of them led with the bond market. So that's 3 different explanations for one afternoon. Whether any of them is misleading is debatable. What is not debatable is that each one leaves out most of what happened today. There's a difference between staying informed and changing your portfolio. Today's news covers a single trading day. Someone investing for the long term is working on a much longer time frame than that. Advizmo automates your investing in personal finances. It runs on a schedule, not a news cycle, so your investing continues whether or not you follow the news. We focus on long-term consistent investing and being tax smart along the way.